This is Killer Innovations, a show about ideas, creativity, and how you can innovate. Welcome to the Innovator's Garage, where you learn to create your next game-changing killer innovation.
Welcome to Killer Innovations. I'm your host, Phil McKinney. We are here in the studio in Colorado, catching up from our most recent travels. You can follow us over on both Facebook and on Twitter to keep up with where we're at any given time. But today we're in the studio with a special guest. Stephen Hill is the Global Head of Innovation for KPMG. Now, if you're not familiar with KPMG is what we used to refer to in the big consulting world as one of the big six. I guess I was in number 8 when I was at Computer Sciences Corporation back in the 90s. But Stephen's got a very varied background, but it has a unique perspective on innovation, both inside of KPMG, but then also how to influence the clients of KPMG. And I'm looking forward to today's conversation about how does innovation really play out and what are some of the things that KPMG is thinking about this. So, Stephen, thanks for taking the time and joining us here on the show.
Well, thanks for having me, Phil. It's my pleasure to be here, and I look forward to the discussion.
So, Stephen, one of the things you and I were talking about before we started for the show today was some of the work that you and KPMG have been looking at, and I've been reading up on it around what you guys are referring to as this intangible economy. And this kind of it was an interesting read about some of the work you're doing, because this has been kind of the frustration of innovators and CTOs and all that, is to account for all of the intangibles as part of the overall valuation versus the tangible kind of view that most corporations look at from a standpoint of asset base and those kinds of things. Can you give us maybe a little bit of background context on both intangibles and then the intangible economy?
Yeah, sure. So first of all, the intangible economy is not a concept that's unique to us, and we don't own it. We didn't even come up with it. Many people have been talking about it. There's good books on this, great authorship, and a lot of articles. But I think it's very interesting perspective, particularly as it relates to innovation, because I think it provides the context for what I'm going to call as the mandate for CEOs and boards to get really serious about how to build innovation capability. And the reason why I think it's an important context is because I think we're coming up to an inflection point around productivity. And productivity has historically been a leading indicator of enterprise performance. It separates winners from losers. It does a lot of things that are important for an economy like ours. That said, I think everybody acknowledges that we've seen a stagnation or a slowing of productivity overall, and that actually is true. But I think in every case where we've seen big S-curve jumps, whether it was the Industrial Revolution, our productivity just prior to World War II, before we really ramped up an enormous industrial complex, and just before the knowledge economy was emerged, you saw productivity sort of plateauing. And I think we're seeing that as well today. In fact, we did some work based on some really good work done by the Organization for Economic Cooperation and Development. They did some work on total factor productivity back, a couple of years ago at the market level. And we took that work down to the firm level. We worked with the Oxford Economics to do this. We came out with 15,000 global firms employing at least 250 employees, and looked at them between 2008 and 2017 to get a sense of how productivity is shaping out. And just like the OECD did, we took the top 10% and called them frontier firms, and the rest of the 90, we called them the followers. And some interesting things came out of that. First of all, growth for the frontier firms on average over the followers is about 2x. So, that spread is significant, especially when you think about year over year performance. Interestingly enough, which was really weird, I didn't expect to see this. There's very little movement between Frontier and Follower in that time frame.
You mean movement from the standpoint of companies moving back and forth between being,
Yes. Yeah.
Wow.
Exactly. You know how many firms moved from 2008 to 2017 between being a Frontier firm or a Follower? Out of 15,000, 18.
Wow.
Yeah, no, it's pretty staggering, right? And I think part of the problem, part of what we're seeing in the data is that it's very difficult to move your productivity significantly, right? We did see some, but it was not, I mean, at 15,000, I would have thought, holy smokes, maybe we'll see several thousand change. But just like everybody talks about the Fortune, 50 or the Fortune 100, whatever is going to turn over, completely in 20 years or less, right? You think those two equate, they really don't. So that was something that we found that was very interesting. There wasn't a lot of, conversion going up or down. But we also saw some trends emerging that were interesting to help characterize, well, what makes a Frontier from a firm and what makes the Followers what they're doing. And we found a couple of things true. One of them was scale matters and how you invest matters. And, what's clear is we're starting to see in very contemporary data, some of those Frontier firms start to exponentially change their platform for productivity based on data and AI, right? We're seeing those kinds of investments really turn their market value much higher. And so if you look at the top 5 market cap companies today, almost every one of them is fundamentally based on intangibles like an Apple or a Google or what have you, versus 3 or 4 years ago when you had just a handful, a couple were up there. So those were some interesting early so what's coming from the data.
Yeah. And we were talking about the productivity piece, the whole stagnation. And it is shocking about how once a firm, particularly on the productivity, gets established, it is hard to change. But beyond AI, what else did you see in that? And how does that tie back onto the concept of this intangible economy?
Well, clearly, one of the things that was a factor, and by the way, AI is in and of itself is a byproduct of the other big intangible, which is data. Mm-hmm. And when you think about, the scale that, or the value that data creates, it's pretty significant. In fact, a lot of people today have a lot of fear of being Amazoned, right? That term really is a consequence of Amazon showing what they can do with a bunch of data. And we're starting to see now, smart organizations are really building data strategies, not how do I protect my data and how do I follow the laws. There's a lot of things with data that you need to be careful about. But how do I use data as a business strategy, right? How do I drive value from my data? And there are, I would say, 4 pillars that you need to think about as you consider your data strategies and your AI strategies. The first is, how do I change my customer experience, right? And how do I use data to predict customer behaviors before they do it? How do I value the assets in my economy or value the assets in my organization differently? Like data, because most organizations don't value their assets the same way. And AI, by the way, never stops learning, so that doesn't depreciate. How do I create as a service capabilities as an organization? And then lastly, how do I really transform my workforce with data and AI? Those 4 pillars, we think, are the foundations for the successful firm in the future.
Well, that's interesting. I think, again, it gets back to this issue of how do you get CEOs and boards, more importantly, in some cases, to think differently about the level of investment, whether it's in tools like AI or attaching or appreciating the value that gets created just from the sheer, the role of data plays in any organization today. Hopefully, they don't have their head stuck in the sand, seeing what everything is going on in the world out there with regards to data, whether it be as you say, Amazon or, with Facebook and Google, there's also the good way to use that data, and there's also the bad way to use that data too, along with that. We're going to take a quick commercial break. When we come back, we're going to pick up on our conversation with Stephen Hill, Global Head of Innovation at KPMG, and talk about coming up topic would be around sustainable innovation. How do you create capabilities within an organization, taking both look at this intangible economy, but also with regards specifically to how do you really make it part of core to an organization to think differently about these kinds of things. So don't go anywhere. We're going to be right back. You're listening to Killer Innovations on the BizTalk Radio Network. Welcome back to Killer Innovations. We're continuing our conversations with Stephen Hill, Global Head of Innovation at KPMG. So, Steve, one of the things that I'm interested in hearing your thoughts on is how do you create core capability around innovation inside of organizations, right? It's, you and I've seen it. We were talking about it, right? Innovation as a word has turned into buzzword bingo, right? And it's very fleeting. It almost gets tied to the individual, who's leading it. But as soon as they're gone, it's gone versus really creating it as a sustainable part of an organization. And you work with a variety of companies of all different sizes and in different industries. And how do you make this thing of innovation? How do you really make it part of and sustainable for an organization, an industry, or an economy?
Yeah. So, look, first of all, I'm with you. I don't really like the term innovation. I think what happens very quickly when you start to use that word is people start to think about ping pong tables and Nerf balls, right? I mean, that's not what innovation is. Innovation, in my opinion, is really to be perceived by leadership as turning ideas into cash, right? And future-proofing your company. I mean, at the end of the day, with the dynamics that are in our markets today, with the speed of change, whether it's technological or social technology, social changes, economic changes, or political changes, you've got to have a vehicle in place that is as committed to understanding how the status quo needs to change as you have built over the years and years of capabilities and people that are operating the business excellently, right? And most of our organizations are built today around operating capability. Very little of it has been spent really learning how to build muscle in the corporate structure to question the status quo and to actually change the status quo. And we did work last year with a group called Innovation Leader to do some survey work. We surveyed hundreds of large organizations globally around the notion of how they're bringing innovation to bear and what they saw the challenges were. And they had first of all, and I think this is by far the biggest issue, 73% of the respondents said that the biggest impediment to them was leadership engagement and support of innovation. So if it doesn't start at the top, the CEO, and you being one of them, understands this. If the CEO doesn't say this is important to our future, it's going to fall flat out of the chute. Over half thought that politics or turf wars between P&Ls and different departments were the next biggest innovation barrier. A little under half said culture, which I'll get to in a second, was a big barrier. And then it went on to say, the inability to act on signals. The second to the last was that lack of budget. There was no budget assigned to it. And then lastly, a lack of vision or strategy. And all these things are very, very important. I think to answer your question, you've got to have one, leadership engagement. And I think to get that done, you need the imperative. What we talked about before around how important data and AI are becoming in productivity and in competitiveness is your impetus, because the status quo isn't designed to take on the responsibilities to build those capabilities. In fact, when you look at the marketplace around AI today, what you see is the suppliers taking all the skills in the marketplace, right, and a lot of the data to drive AI learning and scale. You don't see much of that available for the consumers of AI, which are everybody else other than the tech industry. That is a big issue. And so I think, the imperative for innovation has never been stronger. And as we hit this precipice of those that are going to really jump on productivity S curves and get much larger because they can be so much more productive with machine intelligence working with human intelligence and data correlations that can really satisfy customer behaviors in ways that you could never have done before, like the Amazon, if you will, term. Innovation is going to be your imperative. So you got to get that in place, number one. If that doesn't happen, really you're wasting your time doing everything else. But once you have that, you got to start to build real capability around how do you look at the marketplace? How do you build sensory capability? How does that turn into real budgeted investments that, by the way, the business has to own these investments. The linkage between the business and the group of people who are doing innovation has to be tight and clear. You black box this, you're dead meat. You will never scale in your business things that are black boxed.
Well,
right?
in fact, it's quite interesting because here, people ask me about my, what was my one regret when I built up the innovation program office at HP. My biggest regret was having the word innovation in the name of the team. Right. Yeah. And in fact, here at Cable Labs, we have taken the word innovation out of job titles, and we've taken the word innovation out of any team names. Innovation's capability. It's not a box on the org chart, and it's not a team name. Because as soon as you do that, you've just hampered that team. Because everybody on the outside looking at them going, I don't need to do anything. It's their responsibility.
Right. Yeah, and the common fallacy is, we have a strategy, therefore my investment portfolio for the next 3 or 4 years is already set. Wrong, right? I mean, at the end of the day, you've got to have a systematic, not episodic, view of your investment portfolio and how agile you need to be as an organization to take on the challenges of the 21st century. So there's a lot of important things you do. You got to then connect that scale, right, to your F&A engine that says, I can prove that those investments actually were really good. In fact, I find that when you really track the value of some of these new things, you can show they're far more beneficial from a return on investment standpoint than a lot of what I would call incremental sort of status quo improvement on the margin investments that you might make as a business. Particularly things like platform business models, new ventures that are driving significant growth in brand new channels. I mean, there's a lot of things here that have to be done with discipline. I think that discipline is important. But, get the leadership engagement. You've got to work on culture. Everyone, to your point, Phil, right? Although the word innovation is a bad word, if you have a strong enough CEO, people will coalesce to it. And if they think that they have a piece of that game, if that CEO says, everybody has some responsibility here, and I want all of us to be innovative, and I want our culture to be innovative, I want us to be seen by our clients, by our customers as innovative, I think you change the vernacular, you change the dialogue and the narrative, right, in a positive way.
100% agree. And in fact, my advice when I coach CEOs and that are trying to establish their innovation capabilities is you have to think about the fact that when you walk through that front door, you're on stage. Because the entire organization will take their lead from how the CEO acts, talks. It isn't about just mouthing the words and sending out a memo once a month listing projects. You have to live it every day, every engagement, every conversation with everybody on your team, each and every day. We're going to take another quick commercial break. When we come back, we're going to continue our conversation with Stephen Hill, Global Head of Innovation at KPMG. Don't go anywhere. You're listening to Killer Innovations on the BizTalk Radio Network. Welcome back to Innovations. We're continuing our conversations with Stephen Hill, Global Head of Innovation at KPMG. Steve, as we went out to commercial break, we were having the conversation around, the challenges of sustainable innovation inside of organizations, and I shared my experience of staying away from the word innovation. But there has to be some. As you said, the leadership has to get it. And I'm surprised that the number is so high, that 73% of their survey respondents said, if you're listing their most difficult challenge, why do you think leaders aren't getting it?
It's a great question. And part of that actually, and I know we both we have dislike for the word in some ways. But part of the problem is I don't think leaders really understand what innovation is. A lot of people think that innovation is, unless you come up with the next pet rock, you're just not relevant. And that's not what innovation is. I think defining innovation is super important. And I think it lays out the mandate for building corporate muscle. It lays out the mandate for a leader that you put in place. And I think most importantly, it lays out the mandate for the culture of the organization you want to build into the future.
So Steve, let me jump in here real quick. Do you think there's a single definition for innovation, or do you think every organization should craft its own definition for innovation?
Well, I think you have to customize it for the organization, right? Because the culture makes a huge difference. And look, culture trumps strategy everywhere. So let's just get that on the table. But I do think your definition has to include the notion of innovation is not one thing. Innovation really, in my opinion, is characterized three ways. You have incremental innovation, which, I think a lot of people will consider to be core, which is how do you move the ship, right? You don't turn a super tanker 180 degrees in a matter of seconds. It takes, movements through the dial. That would be the compass. And a lot of organizations, you can scale the culture and the involvement in the institution around incremental innovation very easily. Hackathons do this, contests do this, asking people that are on the production line to think differently about what they do and to give ideas and celebrate those ideas and drive new thinking that way. The other kind of innovation I would say I'd characterize as adjacent, which is, what are the things that you're doing today that you can do that are tangential to what you're doing that adds an incredible amount of value to what you're doing, right? And you can see that a lot in customer service where, you especially see it in automotive today where they used to provide just transportation. Now they're providing technology, right? That's an adjacent technology that's adjacent to what they used to do in cars. But adjacencies are important. And thirdly, transformational, which is, how do you take a business that is, 4 walls and a bunch of people in hours and turn it into a platform business model, for example. And, those are all different kinds of innovation.
So if an organization, I'm with you 150%. And everybody thinks that innovation is only in that disruptive, game changer, breakthrough kind of change versus you can and must deliver innovation across that entire spectrum of opportunities. But if an organization, that can be a little daunting, right? Where do you start? How do I get started? How do I start to transform my organization? Given both your work both inside of KPMG and your client work and the surveys you've done, what advice would you give us on maybe the first 2 or 3 things? If an organization you've got an innovation leader trying to transform the organization, what would be the first steps they should take to really build innovation as a sustainable activity, not just this episodic kind of, go do an annual hackathon kind of thing?
Yeah. So the first thing I would do is, if you don't have that CEO commitment, that's it. But find the leader for innovation that has, if you can, right? This is a perfect scenario. Find somebody who is really famous in your organization for getting things done, right? Pick the leader that, has a reputation that people respect and know, wow, this is important to the CEO because they put, Ken in there, who's been, a champion of our growth the last 10 years, what have you, right? Putting that person in place is important with the mandate to start building a disciplined innovation capability, which is sensing, market sensing capabilities, investment management capabilities, working in collaboration with the business, and then deploying and scaling capabilities in the back to help manage and tell the stories of successes. The other thing I would do is I would start to work on culture of the organization overall. And I think this is really important. And you establish cultural momentum around first, to your point earlier, talking about it and really making it part of a strategic set of imperatives. So it could be one of your pillars of success going forward. I think that's exactly what CEOs and the board should do. Secondly, I think getting them involved in contests. You could have hackathons or just, Shark Tank things where people that are working in the field can come together and be acknowledged and celebrated across enterprise on new ideas. And then actually, guess what? put real money behind the investment portfolio. I mean, if you don't work with your F&A group to allocate some portion of retained earnings or capital back to innovation initiatives, you're doing this, amateurishly, in my opinion. Innovation, especially in these times that we're living in with data and AI being so important going forward, if you don't have a significant budget and a significant run rate for major investments going forward and small incremental investments, as we talked about earlier, that have real funding behind them, then that's also a mistake. So getting money matters, and having that in place is really important. So those are some things to think about. Well,
here's the question I know I'm going to get. And this happens every time on this show when we talk about budget. For some reason, I get a lot of emails when I used to talk about what my budget and how I allocated my spend. Spend at HP was about $4.5 billion a year in R&D, right?
Yeah.
Only roughly about 8.5-9% of that, though, is what I would call innovation spend, right? The question that people are going to ask is, you just said, okay, meaningful, significant. What do you mean by that?
Well, it frankly depends on what you're trying to achieve with the innovation budget, right? And so I would say you want to be very clear with yourself, with your people in your organization, and with the marketplace. I mean, you think about investor calls when investors are clamoring about what are you doing to invest in your future. Those numbers have to be, significant. For example, a lot of Fortune 100 companies today are putting hundreds of millions of dollars into AI and data. Those monies should be tracked explicitly against the specific use cases and efforts, with the idea that RPA investments all the way to class 3 amalgamations of AI have a return that's going to be managed in a disciplined way over time, just like any other business investment, whether it's an acquisition or anything else. Those are significant monies, right? That's a significant budget. And I think you can celebrate the smaller incremental ones as cultural building exercises too. And so when you talk about significant monies, I think you're talking about hundreds of millions of dollars, in some cases billions. And interestingly enough, look at the supplier side of the marketplace to see some really significant investments. I mean, WhatsApp was purchased for $55 billion or something like that. That's just insane. Those numbers are, you look at some of these acquisitions and say, oh my God, how did they justify that? They didn't justify it based on an incremental investment. They justified it because foundationally, it's going to have huge capability for the future.
Yeah, it's what we refer to as innovation by acquisition, right? And it's a valid strategy. So, Steve, thanks for coming on the show. If people want to track what you're doing and what's going on in your activities, where's the best place for them to follow you?
KPMG.com, right? I have a Twitter following too. And I think, emailing me directly, no problem, shill@kpmg.com. I'd be happy to take any and all inquiries and any interest in further discussion.
Great, perfect. We'll put those all up on the show notes. So we'll put those up at killerinnovations.com, and you can reach out to Steve. Steve, again, thanks for taking time out of your schedule to join us here on Killer Innovations. I greatly appreciate it. We are going to take another quick commercial break. When we come back from this break, we have a new episode of 5 Minutes to New Ideas. You're not going to want to go anywhere. You want to get that notebook out and get ready to be challenged, to look at your business or opportunities in a unique and different way. And we'll be right back after this quick break. You're listening to Killer Innovations on the BizTalk Radio Network. Back in the early days of this show, I would share what I called a killer question in each episode. These questions were designed to be used in your personal, team, or organization's innovation efforts. Now, based on feedback from listeners just like you, we've decided to bring it back with some improvements. Each episode of the Killer Innovations has a segment that I'm now calling 5 Minutes to New Ideas. It's designed for the creative mind looking for that next great idea. Each episode will challenge you to think differently about yourself, your business, and your products and services by asking unique, funny, and sometimes crazy questions. These questions are designed to force you to look beyond the obvious and to uncover ideas and opportunities you never before considered. So, get out your notebook and be ready to uncover that game-changing idea. Here is 5 minutes to new ideas. 12 words. Millions of 11-year-old boys and now young girls learn it when they join the Boy Scouts. It was something that I had to memorize in order to earn my first step along the way to my Eagle Scout medal. Each weekly meeting started with everyone saying them aloud. We were expected to follow them at all times. And when a person achieves Eagle, they stand in front of people attending their court of honor and recite them and committing to continue to follow them. This could sound like indoctrination or maybe even a cult. Some organizations could take a lesson on how to establish and then reinforce a culture within their organization. A culture must reinforce its core values, and the Boy Scouts did this at every opportunity, which for me meant more than 500 times standing with my peers and adults reciting these words from memory. So what are these 12 words? The Scout Law. A scout is trustworthy, loyal, helpful, friendly, courteous, kind, obedient, cheerful, thrifty, brave, clean, and reverent. Over the years, I found myself returning to them again and again whenever I ran into those ethical dilemmas we all find ourselves in. Why? Through experience, when I stayed true to the Scout Law, things just went better in life, and it was the right thing to do. Following a series of high-profile ethical lapses that occurred at companies like Enron, a number of universities and colleges added ethics courses to their MBA curriculums. Why MBA courses? The theory being that their graduates would become the future corporate leaders, and these courses would then create ethical corporations. Most recently, engineering and science majors are following suit. The logical reaction of high-profile cases like Theranos, the shocking increase in the number of scientific research work that has been retracted for fraudulent results, and more recently, the ethical lapses in the use of personal information at social media and search companies. While these new courses suddenly transform ethics in business, science, and engineering, I'm afraid not. Waiting until someone is college age to start teaching them ethics puts way too much of a burden on the course instructors. If we want to ingrain the societal expectation of ethical behavior, the foundations of ethics are something that a person internalizes and commits to over many years. I don't believe 1 or 2 courses is enough. Is the Scout Law just some random worms aimed at creating a false ideal? Or is there some basis as to why these specific 12 words? The law comes from the Bushido Code of the Japanese samurai, the laws of the honor of the American Indians, the Code of Chivalry of the European Knights, and from the Zulu fighters that the founder of Boy Scouts, Lord Baden-Powell, had fought against. Why does this talk of ethics have to do with innovation and creativity? With the possibility that artificial intelligence and other technologies being used unethically, we are being asked to confront the ethics of what we invent. Is an innovation ethical or unethical? It could be argued that any innovation could be created with the best of intentions, but applied and used unethically. Chlorine is used in many industrial and household items that are beneficial, yet in World War I, it was used as a chemical weapon. Is chlorine ethical or unethical? It's not the innovation, but how we use the innovation that defines its ethics. What standard should we use as a global society to define ethics? We sometimes just need to recommit and remind ourselves of what it means to be a positive, ethical contributor to society, to be someone who others see as setting a standard rather than blindly following others, to be someone our kids and our grandkids look up to. So why not the Scout Law or something close to it? I'm fully committed to the Scout Law given my many years in scouting, and like all previous Eagle Scouts, I recited the Scout Law during my court of honor as an 18-year-old and committed to following it. Here is a modified version of the Scout Law for all of us. I commit to being trustworthy, loyal, helpful, friendly, courteous, kind, obedient, cheerful, thrifty, brave, clean, and reverent. Now, am I perfect? No. If each of us held each other accountable in a loyal, helpful, friendly, courteous, and kind way, society would be a much better place. To understand what I mean by each word in the Scout Law, I'll be including an expanded definition in my blog post for this episode. So what standard of ethics have you defined for yourself and your team? Does your team know the ethics you expect from them? Do you hold everyone, yourself included, in your organization to that standard? As the saying goes, you get the team you deserve based on the worst actions you permit to happen. Let's set the standard for ethics and innovation. I'm Phil McKinney, and thanks for listening. Thanks for taking the time out of your busy schedule to join in. If you have any comments or suggestions, drop me a note at phil@killerinnovations.com. Beyond this show, I write about my personal experiences of being in the innovation game for the last 2 decades. Topics include innovation, creativity, culture, team building, metrics, frustrations, leadership, and how to win. You can find that content over at philmckinney.com. Now, the reason I started this show back in 2005 was to pay back my early mentor. My first mentor, Bob Davis, invested an immense amount of time in training and coaching me, which had a major impact on my career. When I went back and asked him how I could pay him back, he laughed and said I couldn't. I had to pay it forward. If I could ask for a favor, could you help me pay it forward? How? 1, by giving us a rating wherever you get your podcast, as that helps spread the word. And 2, by telling others about the show. This episode of Killer Innovations was produced by the Innovators Network. You can find the show notes and the entire show catalog going back to 2005 at killerinnovations.com. I'll talk to you next week, and in the meantime, go out and change the world with your killer innovation. Bye-bye.